Hello and welcome to the Weekly Forex Outlook at xm.com. It will be a busy week with 4 central bank meetings, including decisions from the Fed, the Bank of Japan, the Swiss National Bank, and the Bank of England. Amidst the ongoing trade war, which banks are likely to announce policy changes, and what will it mean for the currencies and the markets in general? I'm Maria Pachardis, and joining me to discuss all this is senior market analyst Harlambos Bisuros. So Harlambos, let's begin over in the U.S., where Trump's tariff strategy has caused confusion among investors. Can you tell us about the effect it has had on the markets recently? And also, what are we likely to hear from the Fed when it meets on Wednesday? And how might the bank's decision and the updated dot plot impact the dollar?
Hello, Maria. Yes, indeed, financial markets have been trading in the mercy of Trump's tariff threats and actions, and all this has led to deterioration in risk appetite, with Wall Street indices tumbling. The US dollar has suffered as well as investors shifted their attention from inflation concerns to the broader implications of economic growth. Market participants are now penciling in around 72 basis points worth of rate cuts by the Fed this year, which is nearly one additional quarter point reduction compared to the 50 basis points indicated in the December dot plot. With all that in mind, and with no action expected at next week's gathering, the spotlight is likely to fall on the updated economic projections and especially the new dot plot. Now, if Powell and his colleagues appear genuinely concerned about the impact of tariffs on the U.S. economy, and the dots are revised lower to point more basis points worth of rate reductions this year, the U.S. dollar is likely to extend its slide. Equities, which in the recent past were celebrating the prospect of lower borrowing costs, are more likely to continue their downturn as expectations grow that the U.S. economy may tip into recession.
Turning to Japan now, the BOJ raised rates several weeks ago at its first gathering of the year. What data has come out since then? Do you think policymakers will make any changes at next week's meeting on Tuesday? And what's the outlook for the yen?
Since the prior gathering, Japanese data has continued to suggest that underlying trends of wage growth remain solid, with inflation accelerating as well. Along with the recent hawkish remarks by Bank of Japan officials and the acceleration in economic activity during the last quarter of 2024, investors are now fully pricing in the next 25 basis points rate hike to be delivered in September. And they are also assigning a strong 80% probability for that to happen in July. What further enhances those expectations is the fact that many of Japan's biggest companies have met union demands for substantial wage hikes, and this is the case for a third straight year. Therefore, although the bank is not expected to change its monetary policy decision at this gathering, any hawkish commentary may allow the yen to resume its prevailing uptrend.
Moving over to Switzerland now. On Thursday, the SNB will have its first policy meeting of the year. Back in December, the bank delivered a bigger than expected 50 basis point cut. Can you tell us about the state of inflation in Switzerland today? And also what we might hear from the SNB this time and how it's likely to impact the Swiss franc?
Yes, the SNB cut interest rates by 50 basis points last time in an effort to curb gains in the Swiss franc. However, the uncertainty surrounding Trump's tariff policies has further fueled the currency due to its safe haven status, while Swiss inflation fell to its lowest level in nearly 4 years in February. And this has increased the likelihood for another rate cut this year, of course. The probability for another 25 basis points reduction next week rests at 75%. So, the rate cut alone, given that it is largely anticipated, is unlikely to spark significant volatility in the Swiss franc. For the currency to surrender a notable portion of its recent gains, I think that the bank may appear willing to proceed with more reductions in the future if necessary.
And finally, we'll also get a policy decision from the Bank of England on Thursday. In February, policymakers cut interest rates by 25 basis points. What data has come out since then? Do you think the BOE will sound hawkish or dovish this time around? And what will it mean for the pound?
In the UK, both GDP and inflation numbers surprised to the upside, leading market participants to price in only 2 additional quarter-point reductions for this year, with the next one expected in June. However, a week ago, Catherine Mann, the hawk who turned into dove at the previous meeting, said that Trump's tariff policies and volatility in financial markets mean that policymakers need to act more decisively. Thus, although no action is expected next week, a dovish stance suggesting that more policymakers are holding the same view as Mann could hurt the pound, as investors may revive bets on deeper rate cuts. Now, for the pound to extend its gains, I think that the committee may need to sound more concerned about inflation spiraling out of control.
Harlem, thanks so much. This was the Weekly Forex Outlook here at XM.com.